Hello everyone. In this video I'm going to go over the real estate taxes. So let's go over real estate taxes and the process that we will be finding out. In this process we are going to find out how what is the process to calculate the percentage of tax that will be withheld by the government. So let's go over that. There are two different types of taxes. One is the general, very general, right? So it's like general real estate tax, okay? And this tax is nothing but based on the value. So it's also called valorem. Valorem is the word that says that ad valorem taxes are basically according to the value of the house they are going to calculate. Now that percentage is also we are going to find out, like there is a percentage, okay? So we'll find out how they calculate the percentage that they should be applying based on the value, okay? So and the other type of tax is called which is called the special assessment, okay, which is called special now this is a tax basically when you do some improvement that actually value the property or the real estate, that is a special tax based on the assessments, okay? So in today's let's go over the general real estate tax, and in this, let's say if we can I can able to explain you how government actually calculates the tax. First thing is, let's divide this in the zone. Let's say this is a school district. When I say it's a school district, definitely we need a school building. So this could be a oh no, this is not good. Let's say this is the school building, okay? Let's say this has some kind of not good in this drawing, so let's try let me try one more time, okay? These are the different windows of the school. Let's say this is another window, and this is, let's say, the door of all the classrooms, and the window. So this is, let's say, the school building, okay? We have road to that, and government also have or this let's say we have few houses here. Now these are the houses that we are living in this district, so we need a door, at least window. So I hope that will kind of like represent a house. Let's put this a few houses here, okay? For now 4, let's say 5 houses are there. Actually I can take few of this so that it will look like a big school district where many people are living. So let's say these are the different houses are already there, and we have, let's find out, let's put some dollar amount to each house so we know this how much each. So this one, let's say this cost let's say $100,000, okay? Let's say this house may be 200,000, okay? Let's say this is a very expensive house. Let's say we'll put 500,000, okay? Now like this, every house has its own value, okay? And let's say together all these houses, the total let's say the total value of all these houses is, let's say, $10 million, okay? Now this is the total value, the assessed value of all the real estate that is there in that school district. Okay, so now this is what we found based on the assessor. The assessor is the person who actually appointed by the government to go through each individual property and give us the assessed value. So is also called assessor. Okay, so the assessor's job is to find out the assessed value of the property. Okay, now assessed value and the real value or market value are completely different, two things. Okay, let me explain that right after the process of calculation. So before we actually let me explain this one. So the assessor, basically every year they have to assess the house. So let's say one of these is your house. Okay, let's say one of this is your house. Let me draw that house, a nice beautiful house. This is your house. Okay, it has nice window and the door and the driveway. It is connected to a road. Okay, and it may have some tree here. Let's put some tree. Maybe there are some. Okay, let's say this is your house, and this house is having some area. This is also together. So this is your real estate that you have. This is the property that you have. The real property that you have here, you bought this one. Let's say the current market value of this house is let's say this house is 100,000. Okay, now this is the market value. Okay, but the assessor comes and say they're not going to take the market value, because the market value is mainly for you to sell or somebody to buy, and this is how the market there. This is the value, the market value. Now the tax is not calculated based on this. The tax is calculated based on the assessed value. The assessor will come. So the assessor okay, assessor, let's fix the spelling. Assessor will come and let's say estimate the value of this house is 98,000. Okay, what if it's not 100? It's maybe, so this is the assessed value. So the calculation of the tax is based on this. Okay, so how much percentage of the tax it is going to, so let's calculate. So first thing is, why we have to pay tax? That's because when we are living in a school district, a nice school district, the school is there, we also need a police station. So this is, let's say, a police station, so that we are secure, we are safe in this station, STATION, a police station, so that we are safe, and we also need some government buildings. Let's say I'll put some big pillars here. So usually government buildings always have a big pillar, so let's put some big house here, which is the government building. And so all this buildings, the police station, the school, everything have some expenses, and let's say the total expense is 300,000. Okay, so they always need some money. Government needs some money to run this. Who are government? We all are part of that, right? So now we have to pay this money to run the government in an expense. We have to pay the money. How we pay? We pay taxes. We pay taxes on whatever the money that the asset that we have. So in order to do this one, the simplest equation that is used to calculate this one is that whatever the money that we need, okay, because if you divide this one equally to all the people here, let's say how many people are there, 1 2 3 4 5 and 1 2 3 4, like 20 people are here, in 20 people equally divide, that is not fair, because the person who is having a less amount real estate, he's paying equal amount to run this government, and the person who's having a wealthy person who's having a high a more valued property is paying equal. That doesn't make sense, it's not fair. So government did a very nice thing. They said, let's calculate a percent based on the total amount. They find out a percentage, how much each can be paying, so that based on the value of the property or the real estate they own, they're going to pay the tax. So how to calculate per 100? So let's find out that based on this. So what they did, they actually divide the total expenses, they divide by the total assets, which is, so let me give you the color code so that it is easy to remember. So they're going to divide the total expense, okay, which is this one, divide by the total asset, which is $10 million in this example, okay, which is, if I have to calculate this one, the easiest way, let me get a different color, and I'm going to, let's take purple here, I'll cut each one, okay, so that I know it is going to be easy to calculate. So it is 3, okay, let's go back to a different color. So it is going to be 3 by 100, which is $3 per 100, right? So if I have to charge $3 per 100, okay, means of based on this price, your based on the price of your, so we have to per 100, which is also called, which is the what, $3 per 100 is nothing but 3% tax. That's where the tax comes from, 3% tax. Now in the real estate world, these calculations are a little bit different. So sometime in New Jersey, for residential taxes, they will call as 3% or $3 per 100, which is per 100. They all, for the commercial purpose, they say they don't go by 100 because 100 is too low for them, for commercial big buildings, right? So they wanted to calculate by 1,000. So if it is 3 per 100, how much is going to be per 1,000? Obviously we're going to say 30 per 1,000, right? So this is a little bit higher, which is in the industry, in the real estate business, this is 30 is also called 30 mils, right? So that is that's how the terms that they use in the real estate. So now you know how government actually come with the 3% tax. Now let's go and see how much the tax we have to pay when we have, or you have 100,000, so if you have $100,000 house, this is the market value, okay. Now you have the assessed value is this one, right, which is this one, and we found recent based on the assessed value, based on the county or the district we are living, we have to pay 3% tax, okay. So the 3% tax is always based on the assessed value. So 3% tax is how much? $1. So it will be 98,000 is the assessed value, okay, multiplied by 3% is what? 0.03, which is equal to let's bring the calculator. So it will be 98000 multiplied by 0.03, which is equal 2940, right? So this is the total amount of tax you have to pay for this property.